On Friday, the 4th of April, we have the most anticipated jobs report in the world, the US non-farm payrolls. And here's what to look for. The data coming out on the 4th of April is the earliest kind of indication of how the US economy is doing for the month of March. So that's why it's so closely viewed. Now, in the Fed's last interest rate meeting in March, they're projecting the unemployment rate to tick up to 4.4. You can see it's currently, the last reading was at 4.1%. So in order to get the Fed worried that they're going to have to cut interest rates to prop up a weak jobs market, here's what we need. We're going to need to see this surprise markets above markets' maximum expectations up towards that 4.4% that the Fed project. We're going to need to see hourly earnings ideally coming in significantly lower, so there isn't an inflation fear behind the data. And we want to see the non-farm payroll print coming in below market's minimum expectations, and ideally below sort of October's low of 44,000, and if, maybe even to negative territory. If we saw that, we'd expect the US dollar to weaken, expectations of sooner Fed interest rate cuts to increase, and that should lift the euro dollar pair. So that's the main thing that I'm going to be looking at on Friday, the 4th of April.